What's up, guys? Low key, market just opened. I'm about to do another video today, but market just opened, so I was like, you know what? Why not? Let me just look for a trade. Oh, I get an inverse. Okay. I think we might continue to climb to try to take out that 930 high. I don't think that was so though. Okay, got some consolidation. Check, not that one. Select liquidity, but we broke structure right there. Dang, bro, I don't think there's like any good trades. Okay, inversing that. Look for that gap. That's probably gonna end like that. Yeah, as I say. We could tap that. We could take a sell off of that. Nice, we might tap it. Nice. Okay, we are fully tapping that fair value gap, but we inverse this one. It's still very possible because still have this fair value gap. Bro. Yo, what the dog? Okay, we're fully in the fair value gap. Bah.
Give me a second. Give me a second. No, no, no. No. You thought you would get away from me this time, didn't you? Little. Yeah, baby. No food. No water. Just pure calm. All right. Boogie. Boogie finally let me hit, so I got some new energy in me. Ain't that right, Boogie? Not ready for round two. I'm not ready for round two. Boogie! I'm not ready for round two. I'm not. Stop licking your lips. I'm not ready yet. You took it all out of me, Boogie.
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 40.
I think I get in. No, I don't want to just take a trade just like that. It's not a good trade.
Look at him. He wants it. Anyways, alright. Let's get down to business to defeat the Huns. Y'all remember that? Y'all remember that song from Mulan? It said, let's get down to business to defeat the Huns. Be a man, you must have the strength of a raging river, mysterious as the dark side of the moon. Alright, let's get started. Can you even read that? I can't even read that, bruh. Can y'all read what that says, bro? Barely, bro. I hope this turns out. I can't even read that on that. Can't even read it. Don't look at my jawline. Oh, all right. Okay, guys. Welcome to the first step at turning into a profitable trader. Everything that I've been teaching you before this was a lie. Okay? I was lying to you. Today we are going to teach you support and resistance. Did I get ya? Did I get ya, little guy? Sometimes I rewatch these YouTube videos and I'm like, what was I on? And let's do it again.
I really need a pee. I really need a pee. We're gonna enhance the TJR. These are energy. This is not drugs.
Just you wait for this. Whoa, you can literally see my ass. Whoa, that was serious. That was serious. Okay, now we have to start after that. That was absurd. Wow, whale tail arch in the back. All right, so in all seriousness, today is how to pretty much, I gave you guys like an outline of how you guys should outline your trading plan to make it so you can't fuck up, okay?
Well, that's crazy. Y'all can't even see me if I put my brightness down.
Like this is
That's
a foolproof idiot. You guys proof plan. You just need a pencil and a paper, okay? So pull it out. All right, and we'll jump right in. Okay, so this is going to be your trading plan mock-up. Okay, and we're just going to go through the steps together. And as I'm asking these questions, you're literally going to write down like, you know, like, oh, I have to add one. I knew I was missing something. Okay, now we're done. Okay, so this is the mock-up of kind of, you know, like what I'm expecting you guys to make your little thing look like. Your trading plan. Okay, so the first thing you want to start with is obviously your little thing look like. Your trading plan. Okay, so the first thing you want to start with is obviously risk management. That's one of the most important things for this. Okay, so first we want to pre-designate our risks so we know what we are risking every single day. We know exactly how much we're losing. We know exactly how much we're going to lose. So when we lose it, we're not crying like a little baby, like all of you guys, you know, breaking your shit and screaming to your mommy. Okay, we're done. With that, all right, what is our pre-designated risk? Are you going to use a set lot size? And I'll make a video on this later. Okay, we're just going, and again, like you guys shouldn't necessarily be like trading yet because we haven't even gone over strategy and how to put everything together. Okay, yes, maybe some of you guys like have watched my stuff before and you guys will understand this, but for the people that started at the baseline, are you going to want to use a set lot size so you don't have to calculate it every single time? That's what I use. I use multiple set lot sizes based on how like my risk allocation for the day. So there's like high risk, regular risk, and low risk. I have 3 set lot sizes that I kind of cycle between that I determine on, you know, like what I'm using for the day. And that'll be a whole separate video. Maybe that'll be the next Psychology Days video. Okay. Or are you going to use a calculator?
Why do I look ginormous in this shirt? Alright, never mind.
Calculated lot size, meaning you're literally going on a lot size calculator, typing in your account balance, typing in the percent that you want to risk, typing in your pip, your stop loss in pips, and then it spits out a lot size, and then you enter that into your MetaTrader and you enter. That's what most people do, and that just takes a little bit too much time for me. And I've gotten really good at guesstimating what my lot size should be based off of how my stop loss looks. A lot of you guys should use a calculated lot size. A lot of you guys shouldn't use a predetermined lot size because you won't know what you're risking.
We got that reggaeton. Today we're gonna be making beats you guys send me, okay? So let's go.
What else do we have to do to pre-designate our risk? So we got the lot size down. We know the monetary value. And then also how many trades are you taking? I recommend 1 trade a day. That's what I do. 1 trade a day. Sometimes I'll take 2. But when I take 2, I also understand my risk. I usually know that I'm willing to take 2 that day, and I de-risk on both those trades, so it pretty much equals out to the risk of 1 trade. I'm only willing to risk so much money for 1 day. I know the amount of money that I'm willing to risk for each day, and if I'm taking 2 trades, those 2 trades will add up to that risk for the day. If I'm taking 1 trade, that 1 trade will add up to that risk for the day. So I know what I'm risking day in and day out. And you guys need to do the same. Okay, so write down what lot size are you going to calculate your lot size every single time? What are you risking every single day? What is the monetary value that you're willing to risk every single day? How many trades are you taking a day? And this isn't to say, don't say 5 trades because you're going to lose all fucking 4 of them and win 1. Okay, I would say 1 to 2 trades a day that are high probability, quality setups. Okay, moving forward. Right? So figure out, are you going to calculate your lot size? If so, what are you risking every single day? How many trades you're taking? Write that down. That is the first thing in your trading plan. I am risking $100 a day while taking one trade. Don't say 1 to 2. I can say 1 to 2 because I actually have my emotions under control. You guys should literally just stick to 1 for now. I am risking $100 every day while taking 1 trade a day. Period. Move on. And make sure this shit is out in front of you while you get ready to start trading every single day. Moving forward, when are you trading? Identify the times that you are trading. And I don't want to hear, I kind of just trade in my free time. Idiot, you think?
There's sessions. New York free market opens at 8:30. New York Open starts at 9:30. Asia starts at 6 p.m. London starts at 3 a.m.
Professional traders can just sit at their damn computer like you guys do all fucking day and trade. Bro, I come into these markets, murder it for the first hour and a half, and then leave. I designate my trading times because guess what? That's how a job works. No one that is a professional at this says, yeah, like sometimes I do Asian session, New York, and London session, other times. Like, bro, they have designated times that they trade. I trade New York Stock Exchange open. That's the AM session. Some people trade New York Stock Exchange PM session. Some people trade Asian session. Terrible session to trade if you ask me. Some people trade London session open. Some people trade London session closed going into New York Stock Exchange open. Understand what works for your time zone, what works for your sleep schedule, what works for your work schedule, and treat this like a fucking job. Designate your time. What session are you trading? Once you figure that out, once you understand what session you're trading, so for me, it's New York Stock Exchange open. I take a trade within the first hour and a half of New York Stock Exchange, and if I can't find a trade, I'm not taking it. That doesn't mean I close my trade after the first hour and a half of the session. That just means I have to be with it. I have to be in a trade or else I'm done. Okay? When are you trading? After news or on news at all? Are you the type of person that likes trading on news? Not CPI, not NFP, not FOMC, not PPI, not the high impact news, not the news that fucks up the market. We're talking about just like the regular red or orange folder news that you read the bias on, figure it out, and if it plays into your bias, you can take a trade. Or do you want to just be a super probable and high profitability trader and not trade on high impact news at all. Maybe you're still learning and you just want to completely avoid news altogether. That will keep your win rate very high. When you're starting, that will give you an insane win rate. Why wouldn't you want to do that? Because you're a little fucking addict to trading. Stop that. This is to stop that. This is to turn this into a hobby, into a profession. I wasn't fucking lying when I technically wasn't lying when I said like this is like the first fucking like get you into shape fucking vid. Okay? So when are you trading? You know what session you're trading, know what time frame know what time you're going to be trading. Are you going to be trading after news or on news at all? Write it down. If news fucks up the market, I'm done for the day. If news causes, literally draw it out to like the pip. If news causes like a 5-point spike within a 5-minute candle on news, and also this is just like me saying this randomly. Okay, you determine this yourself because I don't even know. Okay, so if news causes like a 5-point spike within 5 minutes, are you going to be willing to trade that day or are you going to opt out? Write that down. We want to limit extra trades. We want to limit extra risk. We want to limit low probability. And that's what a trading plan does. We get to the point where this is robotic day in, day out. This is how we become emotionless. Moving forward, what are you trading? Are you trading the S&P 500? Are you trading NASDAQ? Are you trading US 30? Are you trading a Forex pair? Are you trading commodities? Are you trading crypto? Write down what you are trading. Most of you guys should only be sticking to one pair. Whether you want to stick to just the S&P 500, whether you really just like trading GJ, whether you really just like trading gold. I'm sick and fucking tired of seeing little fucking kids in my Discord trying to trade 10 pairs at a fucking time when they can't even master fucking one of them. You are unprofitable and you're trying to trade 10 fucking pairs? These are 10 different marketplaces. You're trading the S&P 500, which is a fucking US index. You're trading gold, which is a commodity, a fucking precious metal. And then you're also trying to trade Bitcoin during Asian session over the weekend. Are you stupid, bruh? Choose one and leave it at that. And once you turn profitable with that one, add another. Because anything on top of one, you're adding lower probability, you're adding risk, and you're adding fucking hardship to your trade. Trust me, bro, I've been through this shit. I've been through it already. What are you trading? Write it down. So that, and then once you write it down, delete your whole fucking watch list full of 30 Forex pairs, full of the fucking Mexican peso against the fucking Indian rupee, bro. Some of y'all love that shit. Delete it. Choose one and master it. Because all these markets move differently. Once you get a good feel for a pair, you wonder why I trade the S&P. You wonder why I trade gold. You wonder why I trade the pound versus the yen, and you wonder why I trade GU. I've been trading GU for 5 fucking years. I've been trading GJ for 4 fucking years. I've been trading gold for 3 years, and I've been trading the S&P for 4 years. I have have years of experience with all of these. Before that, I was only trading. Where is this? Why isn't it letting me click? Before all that shit, I was only trading GJ. Before I even was doing the S&P, I was only doing GJ. Before that, when I was unprofitable, I was trading gold and I was trading GBP USD together. Now I look at them because I'm a fucking good trader, and guess what? I can win off them. But when did I add them? Once I turned profitable with just GBP JPY. Choose one pair and stick to it, understand it, and it will increase your probability within the market.
Never sue the other driver after a car accident. There's a better way to get paid a way bigger check without having to go to court.
Perfect. Now that we all got all that shit down, we know what our risk is. We know when we're going to trade. We know what we're going to trade. Now, how the fuck do we trade? How the fuck do we enter? Here we are. What are our confluences? All the building blocks, and this is going to be difficult for us to write down right now when we start.
Usually, in my trade recap video, I just waited for a liquidity sweep. Boom, it just, no, it hasn't taken out. Dang. That's New York highs. Yeah, we're not hitting that. But I just wait for like a liquidity sweep, like a structure, fair value gap, or liquidity sweep, inverse fair value gap, and then equal fair value gap or equilibrium.
Together, and we're gonna have another one of these spreadsheets for tomorrow's video. When we
I need to pee so bad, I'm not even in my chair right now.
Type thing. Okay. When we put that there, okay, I want you to figure out what confluences you want to use.
Is it
And this
fire?
may take time. This may take back testing. This may take, like maybe you test out liquidity sweep break structure as one confluence for like 2 weeks. You see, okay, write down your win rate. Write down like how it felt. Where you like write down your emotions for it. Journal. Are you going to take a trade off liquidity sweep, break of structure, and then a fair value gap or order block entry? Maybe you want to wait for extra confirmation. Maybe you know that this works better for you because you can get a better risk to reward. That's what most people do. Most of the time, I want this to happen unless I get a good risk to reward off of just the liquidity sweep and break of structure. Are you going to be super probable? Are you going to be super risk adverse? And are you going to wait? And are you going to take a trade that is only aligned with your daily bias, that has a liquidity sweep with your daily bias, that has a break of structure all aligned with that daily bias, that's all aligned with the overall trend of the market, because you know that's going to be high probability because that's where the market wants to go. Me personally, if I'm you, that's what I'm doing. I know the S&P, what are we right now? On the daily, we're bullish. What are we looking for? We're looking for buys. If we can't find buys within the market, off a liquidity sweep, break of structure, fair value gap, order block entry, we're not taking the trade. If it's not during New York Stock Exchange open within that first hour and a half, we're not taking the trade. If it's not on the S&P 500, we're not taking the trade. If I don't know what my set fucking pre-designated risk is, right when I wake up, right when I get ready to trade, I'm not taking a trade until I figure that shit out. And then at the end of it, you know what you're risking, you know when you're trading, you know what you're trading, and you know exactly how to enter, and you have that step-by-step plan, and the rest is just press the damn button. And you did it. That's how you take a trade. You follow every single fucking step in your trading plan to the point where you are a fucking robot, where you don't enter off anything else. You don't enter off of, you don't enter off of, FOMO, I think it's going to go higher because of this. Shut up. Does it follow your trading plan? If no, leave. If you already took your trade for the day, leave. If you already maxed out your pre-designated risk for the day, leave. If it's a U.S. fucking bank holiday and you can't trade the S&P 500 and that's the pair that you trade, leave. Stop looking at other forex pairs. Stop looking at crypto. Stop looking at commodities. If you don't get a liquidity sweep and a break of structure and your fucking all your confluence is getting hit, don't take a trade. It's literally as simple as that. This dumbs it the fuck down. This is foolproof. It tells you exactly what to do, when to do it, and how to do it. And this is what's going to turn you profitable, is understanding this shit. And if you can't understand this, leave and don't try trading, because you won't make it far if you can't understand this shit. So take a little screenshot of this shit. Maybe paste it in your notebook, put it on your phone with and write out what all your things are next to these questions. Okay, and on tomorrow's video, we'll talk more about all of these entries on how we can enter. Because before we even get into the chart portion, because I know for a fact on day 2 of putting everything together, on the Putting Everything Together series within this, y'all are going to be asking, how did you do this? How did you do that? How did you do this? How did you do that? We need day 1 first. We need to know what our confluences are. We need to know what our building blocks are. We need to know what they're used for. We got to do a recap of all of that, because maybe you forgot. Okay? So with that being said, you got your trading plan. You're getting real fucking close to getting this shit, and getting real fucking close to getting to the point where you have your strategy down, you have your trading plan down. Hopefully your emotions and your discipline and your mental has been growing throughout all of this. This was your homework today, by the way. Just writing up your trading plan. You should have been doing this during the video, or maybe you just wanted to watch the video and then do it afterwards. I don't care. Okay. Got it? Cool. I'll see you boys tomorrow. Start putting everything together, talk about the confluences, talk about the building blocks one more time, talk about what they're used for, talk about how we want to use them, how we can enter within the market, how we can use certain building blocks together to take certain types of trades. It's going to be a lot of information tomorrow, and it's going to be a lot of information following with that Putting Everything Together series. So pop a fucking Adderall, fucking snort some, no, I shouldn't say that. Don't do that. Don't do that. Don't do that. Focus up. That's all I meant to say. Drink some water. Drink some Gatorade. And strap it, okay? Because we're going to be learning a lot tomorrow and the days following when it comes to the trading portions. That being said, that's all from me. Catch you boys tomorrow. Peace out. Stay safe. I'm still in San Diego. I get back real soon. All right.
This is my.
Yo, why do I need to pee, bro? All right. One more video. And then I gotta go. Because I have church.
Here, well, good. Welcome to probably the most anticipated video in this boot camp, or part of the series of the most anticipated video of the boot camp. We're not getting into charts today, to your sadness. Today is putting the pieces together, part one, where we go over every single building block and start plugging them in and start figuring out how can we actually put these together. And how can we make sound trading decisions based off of all these building blocks that we have, based on this newfound knowledge that we have within the market. So, without further ado, let's just get right into it. Let's try and make this quick. There's going to be lots of notes for you guys to take on this. I suggest you guys write all these down.
No.
It'll be very helpful. Okay, so putting the pieces together. First of all, try and make this quick. Get right into it. Let's try and make this quick. There's going to be lots of notes for you guys. So putting the pieces together. First of all, what are our pieces? What are our building blocks? We have liquidity sweep, we have break of structure, we have order block, we have fair value gaps, and we have equilibrium. Okay, those are our, how many is that? 5 building blocks within this. Okay, next, what do they tell us about the market? Okay, so what do liquidity sweeps tell us about the market? Liquidity sweeps show us the potential for orders to get filled, right? It just means a high or a low getting taken out. We don't know whether it's confirmed yet, right? And how do we get confirmation? Next one, break of structure. What does break of structure tell us? Confirmation that orders were filled and we see a market structure shift, right? If we're in an uptrend and we see a liquidity sweep and then a break of structure to the downside, it's pretty safe to say that, hey, smart money orders got filled and we're going to go in the opposite direction. Okay, moving forward. What do order blocks tell us about the market? Order blocks are the price range where orders were filled, right? It's that boom, that move up that caused the liquidity sweep where orders were able to get filled within that price range, okay? And then boom, price drops because of it. Next, what do fair value gaps tell us about the market? Fair value gaps are the price range with a lack of liquidity, right? There was nobody going in the opposite direction of the market, right? It's usually that big candle, that big imbalance candle, right? Either big candle to the upside or big candle to the downside with no counteracting orders within there, right? So there's a lack of liquidity within that price range. And then what is equilibrium? Lastly, it's just finding that discounted price between highs and lows, okay? Write all that down. Write all that down. Let me shrink my face for y'all so you can read this. Write all that down. Okay? So, how can we find entries? How can we put these together? How do these tools, these things, give us entries when put together? First, right? We'll just do these in order. First, liquidity sweep combined with the break of structure. We had orders that had the potential to get filled off of a high or a low within the market, and then they were confirmed that they got filled by a break of structure because we can literally see market structure shifting. Okay, that's the first way that we can find an entry within the market. Liquidity sweep.
According to Market US, the global artificial intelligence market is expected to almost 19x in size over the next month.
Liquidity sweep. That's the way that we can find an entry within the market. Liquidity sweep. Liquidity sweep. Break of structure. Why? Because we have the potential to fill orders, and then we see confirmation that orders were filled. Enter, right? Because that's going to be the top of the move. Moving forward, another way to enter while putting these together. Liquidity sweep. Then break of structure. Let's say we don't like the risk to reward that gives us. What is our first retracement tool that we always look for? That
Order
first
block.
Retracement that we could get.
Order block.
Order block. Okay. When orders have the potential to get filled and were confirmed that they were filled by a break of structure, and then we wait, we're patient because we didn't get that risk reward that we wanted. Maybe it was a bad risk reward, so we wait for the price range where orders were filled previous, right, in that order block, in that move up, to get an optimal entry. We enter at the order block, stops above the highs. Moving forward, what's another way for us to enter? We see a liquidity sweep. We see a break of structure. and we see a fair value gap get filled, okay? And these don't have to be simultaneous, right? You could see a liquidity sweep, a break of structure, you miss the order block entry, price trends lower, and then you see a fair value gap that you enter off of, okay? So what does this combine? Orders that had the potential to get filled, confirm that they were filled by the break of structure, and then we wait for the price range where there was a lack of liquidity within the market in the opposite direction of our bias, right? So if we're bullish and we see lower, and then you see a fair value gap that you enter off of, okay? So what does this combine? Orders that had the potential to get filled, confirm that they were filled by the break of structure, and then we wait for the price range where there was a lack of liquidity within the market in the opposite direction of our bias, right? So if we're bullish and we see a fair value gap, a bullish fair value gap get filled, that means there is a
Lack of bearish momentum and lack of sell orders.
of liquidity to the downside within that price range, right, which is against our bias, and we're waiting for that price range to get hit and a reaction off of it, or just for it to get hit for us to enter. Okay, and then lastly, all right, we have liquidity sweep plus a break of structure plus a fair value gap or order block getting filled plus equilibrium on top of that for ultimate confluence. Okay, this is like a foolproof plan to enter if you are a beginner. Okay, the higher up you get on this list, the more risky you get. As you can see, right, these two are kind of equal. This is the most safe. This is the most risky. Okay, it goes like 1 most safe, even, most risky, 3 most risky. Okay, so what are we looking for on this, right? We have a liquidity sweep, break of structure, fair value gap or order blocking getting hit, along with the confirmation of price being in a discount. Okay, so what does that mean for us? Orders had the potential to get filled with the liquidity sweep. They were confirmed that they were filled by the break of structure, and then we wait for the price range that has either a order block or a fair value gap, right? So either where price was able to fill orders previously, or where there was a lack of liquidity within the market. Okay, along with it being within a discount for us to enter. And that is how you can put the pieces together to start taking trades. I know this was a relatively short video. It's going to be a lot of shit for you to write down. Write all this down. This is your homework. Write all this down. This is part of your execution plan. This is part of your execution. So remember yesterday when we talked about our trading plan, this is a part of it, okay? So when you had your trading plan, when you said your execution plan, you need to write out, you need to choose which one of these that you want to use, okay? And make sure you write these down in your notebook, okay? Write down and understand why the market's moving. Understand what these are and why we're taking trades off of them, not, oh, it's bouncing off the floor. Oh, it's bouncing off of the freaking EMAs that cross. Come on, bruh. We're smarter than that. We're better than that. Let's be good, okay? So, with that being said, we put the pieces together. In 2 days, right, after tomorrow, we will do putting the pieces together part 2, and my guess is I will film that today because it's going to be a long-ass video. That's my guess, at least. Long-ass video showing examples of liquidity sweep and break of structure, liquidity sweep, break of structure, order block, liquidity sweep, break of structure, fair value gap, liquidity sweep, break of structure, fair value gap, or
My bad. My mom needed me.
order block, and equilibrium all put together. Okay, so with that being said, I appreciate you boys. Make sure you write this down. This is very important. As you guys know, this is your strategy. This is how you're going to execute. And I know that I say strategy isn't the biggest part of trading. It's not. But if you don't know how to execute, that's a big issue. The bigger issue is when you know how to execute, but you can't control your emotions and you can't be robotic with it. Okay, but the first step is understanding how to execute, and this is how you do it. So make sure you get this down. Make sure you understand all of these things, and if you don't understand them, okay, go rewatch the bootcamp videos on all these building blocks. Go rewatch my solo YouTube videos on all these building blocks that I made literally at the start of this YouTube channel. Okay, rewatch all of those, get a good feel for it, and then from there, we will be locked in. We'll be ready for the charts. All right, with that being said, I'll catch you boys tomorrow. Been putting in a lot of work these past 2 days, so we can get these videos this out to you guys. Hopefully you appreciate it. I know I've been working hard, and I know you guys have been working hard too. Let's keep it up. I'll catch you boys. Peace.
Are you having trouble trying to keep up with your professor?
Okay.
You've got to try Otter. Here's how it works.
I think I'm gonna cut it right there. Gotta get to church. Tomorrow I'm probably gonna watch Hard Work and Execution, both of those. And yeah, that's really just it. All right, peace.